Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, February 15th, 2020. Now, this week, I talked to Devin Banerjee of LinkedIn about whether or not there is educational redlining. Let's take a look at that discussion.
So redlining in education is typically refers to actually a now illegal practice of refusing student loans based on where students live. A new study is coming out and saying that there's something similar to redlining going on where lenders are adjusting rates and charging students more based on where they're actually going to college. So you attend a four-year college, you'll pay less interest. You go to a junior college, you may pay more. You go to Harvard, you pay less. You go to Howard University, you're paying more. And so this nonprofit, the Student Borrower Protection Center, came out with this study, this report, actually naming and shaming a couple institutions, really putting Wells Fargo in the hot seat for these.
Like they need some bad press.
I know. They've really had a lot coming at them. Wells, of course, I should just note, a spokesperson in the story, said that they believe, they abide by all laws and regulations. Mm-hmm. But this nonprofit, the Student Borrower Protection Center, is coming out and saying that we should really be very attentive to this booming use of alternative data used in determining credit decisions. And so lenders now have access to all of this granular data, things like where you live and stuff like that, which is illegal redlining, but now where you go to school, other behavioral traits, all that kind of stuff. And so this nonprofit is kind of not blowing the whistle, but trying to wake everyone up to the fact that this boom in alternative data, which a lot of people tout as a real asset in credit and lending, can really exacerbate inequality, or it can violate laws, unless it's sort of combined in a mosaic, way with other information and other standardized information. One interesting thing was in Wells Fargo's statement, they noted, which of course every lender notes, and this is the fundamental of the business, but they're trying to evaluate, the likelihood of repayment and stuff like that. But it's not, that goes into, the volume of the loan and stuff like that. But kind of making that judgment call about not, you go to a state school or a junior college means your ability to pay off the volume of the loan and the terms agreed to. That judgment is kind of crossing the line, many people are saying. And this conversation also reminded me about something you and I spoke about maybe a year and a half ago on the podcast, which is the rise of alternative ways to fund an education or to finance an education. And we saw a few LinkedIn members point this out. And one of the most novel ways are these things called ISAs, income share agreements, where students effectively are selling equity in themselves, you might say, or selling an ownership of their future income stream. And this started as talk and kind of a creative idea a couple of years ago. Now it's actually being implemented, most notably at Purdue University in Indiana, under Mitch Daniels, the former Indiana governor, who's now president of Purdue, is really pioneering this, and it's in place. I looked at their website about an hour ago, and it's right there. It's an alternative to taking out a loan. In terms of ISAs, I think a lot of the news that's been out there and the storytelling has been around just their creation. I don't think the data has really been run on that. I would love to see Purdue report out the kind of success, you might call it, or at least some qualitative results of that. I will say more people are looking into ISAs. I had this conversation last summer with Tony James, an executive at Blackstone. He's a billionaire investor, and he was telling me at this dinner that he personally is actually trying to spend more time thinking about ISAs as sort of a securitized financing tool, which tells you a bit about where we are in the cycle, that we're looking for more yield. Investors are looking for more creative ways to earn a return. But it is something that if everyone agrees to and it's not abused, I think it could grow in popularity. I would say that I think regulators are paying attention to at least, I don't know if student loans in particular, or at least this element, but generally this use of alternative data in credit decisions. If you remember about 2 months ago, there was a bit of a kerfuffle. Steve Wozniak, the co-founder of Apple, tweeted that, with his new Apple Goldman Sachs card, that his wife had received more onerous terms or something than he did, even though they share finances. And he kind of wanted that investigated, and a government agency, I don't know which one, did pick that up and was investigating it. So I would say government agencies, I think, are responsible on this. I'm not sure if you're looking into the specific flavor of education redlining, but I'm sure after reports like this and the stories that were written about it this week, that it's something that they'll take a look at.
And I also spoke to Connected Technologies President Kevin Urso, a cybersecurity expert, about the recent SEC cybersecurity best practices for financial services. Let's take a look.
So the report, it's a lot of the same things we've heard last year. When you look at it, the recommendations what they're seeing people are implementing are, I would say, like our top 10 things that a company should implement to make sure that they're secure and doing best practices. Things like access control, data loss prevention, having policies in place, internal monitoring. So there's a laundry list of things that a company should be doing as a best practice. We've talked about this before. The big companies are spending a lot of money to do these things. Those medium to small never had to do this before, probably never budgeted for it before, and some of them may not know what to do. So articles like this and best practices like this are a good starting point to kind of spell out what needs to be done. And we're also seeing a lot of regulations starting to come out. Just this year, New York State issued the New York Cybersecurity Shield Act. So that's an act in New York State. I kind of equate it to the GDPR. I don't think we're ever going to have a federal regulation that says you have to do these certain things, but I think we are going to start to see each state mandate requirements. So the New York State's very similar. So it's a set of guidelines, very broad, but it's basically saying that if you do business in New York State, you're responsible for certain protections. You have to be taking reasonable protections for your employees' data and your clients' data. And what does reasonable mean? It depends on the business. It changes for each one. So they are, on purpose, a little vague. But I think there are certain things that every business should be doing. The biggest thing we hear is, I know I got to do this stuff, but it's not convenient for my business. It slows me down. And honestly, we have to set expectations at the beginning. A lot of the security is not going to be convenient, and we have to figure out a middle ground. We don't want to put so much security in that it stops your daily workflow, but we have to do enough that it's reasonable. So things like security awareness training for your end users, making sure you have a patch management program in place, making sure you have a really good disaster recovery and backup system in place, and maybe even in internal monitoring, someone watching your internal network to see if something's going wrong. I think those are all reasonable things that a small to medium business could do to get them to the next level of being secure. When we sit down with clients, potential clients, I hear a lot. Hey, I don't really have anything, or why would someone come after me? And I try to explain to them, I say, but if you're a lawyer, if you're a financial expert, you rely on your reputation, your credibility. Now, if word gets out that a client's data was breached because you didn't take some basic steps, that's a significant event in your business.
Yeah,
you're gonna have a tough time building that trust back. Yeah, I think the first step any organization needs to do is they need to know what they have, what type of data they have, what they need to protect, what they need to control. Who should be able to have access to what data. A lot of companies haven't even done that first step where they know what's important to them.
And when we come back, you're going to want to pay attention, because tax time equals tax scam time. All this and more, so stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. You know, earlier this week, I spoke to Dan Klein of the Motley Fool about potential tax scams. Let's take a look.
There's two types of tax scams out there. The first is, let's call it a passive scam. This is where someone gets a hold of your Social Security number and files a tax return on your behalf, but of course with their address or their bank account to get your refund. And I know what this is like because this happened to my wife and I maybe 4 years ago. I pretty late in the tax season, maybe like April 13th, filed my taxes. I'm kind of a complicated tax situation. At the time, I was splitting my time between 2 states. I have multiple clients. I'm a freelancer. I mean, you know all of these issues. So it takes a while to get it all together. And when I went to hit send on the tax program I use, it said, you can't send it. You've already submitted your taxes. And I called them up and I said, what does this mean? And they say, well, clearly someone has filed under your Social Security number. When that happens, you have to go to the police. You don't have to, but it's better if you go to the police. You get a police report on this. It takes not a long time, at least in my small town it didn't. You then have to hand file a form with the IRS saying what happened, and your taxes, you have to print them out and do them on a paper basis. None of this is overly complicated. The problem is it holds up your refund for 6 to 8 months while they sort through this. And in our case, it was kind of funny because the person who defrauded us input their bank account wrong, so they'd actually used our address on their fake tax form. We got a refund check made out in our name that, of course, we weren't entitled to. If this ever happens to you, do not deposit said refund check. This is not your money. This is a mistake by the IRS. So you have to alert the IRS that this happened. And I think in our case, we did it through an accountant, and the check just ended up getting destroyed. Like, I don't think you actually had to mail it back. But don't deposit the money. That is theft. You are not entitled to a tax refund just because somebody else filed taxes on your behalf. You can lock your Social Security number, but the reality is anything you can do to prevent this creates all sorts of other hassles. So one of the biggest things you could do is file quickly. File before the fraudulent people do, because the fraudulent people aren't going to try to prove that they're the real people. That's not, of course, a great system. The reality is, as long as we have issues where our Social Security numbers and other personal information is being made available publicly to criminals, you're going to have situations like this. And all you can be is vigilant in that file your taxes as soon as you can, and if you see that this has happened, take the steps needed. It's another reason why I am a big believer in not getting a big tax refund. Because what happens to you if you're in one of these situations where you were counting on $4,000, $5,000, $6,000, and all of a sudden it gets delayed by 8 months? Take that money as you earn it and sort of, work with an accountant, work with someone in your HR department to figure out what your proper deduction should be so you're not overpaying. The IRS is woefully underfunded. But as a consumer, as a taxpayer, it's a very mixed feeling about whether you want the IRS to be better funded. In some ways, you want them better funded on things like this, protecting my identity, but do you want the IRS to start nitpicking you because you made a purchase in one state, no sales tax on it, but didn't pay it? I mean, I went through an issue. My house was my brother's legal address for about 6 months while he was in between jobs. And he paid alimony, and he actually used Venmo to pay his alimony, and the IRS did a paper audit of him. And I was opening his mail for 6 months. So I saw this, and it said, hey, you claimed whatever it is, and it was like $17,000. We accept this part of your alimony, but this part, we don't see any record that you paid it. So he then went in and had his accountant. My brother makes a lot more money than I do, so he has a big time accountant. And he had his accountant send, here's the record, here's what I sent. And the IRS actually asked for the direct Venmo screenshots to show that he did this. It wasn't overly scary, though it's never fun to open your mailbox and see the IRS envelope, and took a second to realize it didn't have my name on it. But it was a pain. So as consumers, do we want the IRS to be funded so well that it can really go after nitpicky stuff? I don't think we do. But I think we do want the IRS funded so it can protect our identity and go after wide-scale fraud. The corporation that's underpaid by a huge amount is probably getting away with it right now based on the very limited number of audits being done. Here's the thing we do, and I think this is a failure of both the Congress and the executive unit, and it's a function of age. If you watch the hearings when they had executives from Facebook and Google and other people in, the people making these decisions are not people who are well versed in modern technology. So a 25-year-old hacker is always going to be 5 steps ahead of Congress. Yeah. Should this be a branch of the US government, a function just like we have the CIA and the FBI? It probably should be. But you literally have people that barely know how to like something on Facebook making these decisions. And there's a true lack of understanding of how technology works. So that is a big disconnect and a big problem. There's also an adversarial relationship currently between both parties, really, and big technology. There are calls to regulate on the Republican side, calls to break up Google and Facebook and other companies coming from Democrats. So if you're Google and Facebook, I don't think you have a lot of incentive to say, hey, here's these tools we created. Why doesn't the IRS also use them? Here they are, take them free of charge. So this is going to be a big problem. But I think we should also talk about the second type of scam.
Okay, we've got about 2 minutes left, so why don't we do that?
So let's just be very clear. If the IRS wants to talk to you, they send you a letter. That is the only scenario. The letter comes, it has a big clear window. It says Department of Internal Revenue Service. It's very obvious. It comes with the guide to taxpayers' rights every single time. So there are people getting fraudulent letters, but those should be pretty easy to spot because there's a lot, in the IRS, if you have to, could verify whether they contacted you if you call them. But if the phone rings or you get an email threatening, if you don't pay up, this is going to happen, the IRS never initiates a phone call to you. They never email you. If the IRS has to do anything other than sending you a letter, it probably involves the police, and you will know it's real. So any scam, if someone purporting to be your bank calls you and asks for information that the bank should clearly have, like your social security number or your account number, hang up the phone and call your bank and ask, hey, I just got a call saying there was an issue on my account. Same thing with the IRS, except if it's a phone call from the IRS, you know it isn't real. And it's also important to note that the IRS only wants to be paid properly through U.S. currency. If the IRS is asking you for iTunes gift cards, the IRS isn't handing out Red Lobster gift cards to its employees. Yeah. They want to be through traditional methods. Yeah. So anything that isn't a letter telling you what the issue is, which will usually give you 30 days to answer, and most letters from the IRS, as terrifying as they are are minor things. You put 500 and the number was 5,000 and you owe an extra $200 or whatever it is. That most audits are paper audits where it's just, we think you made a mistake, either provide proof that you didn't or answer the mistake here.
And in our last segment, I sit down with Cerulli Associates' Anastasia Krimkowski to discuss financial wellness. Let's take a look.
This is something that we come across a lot in the retirement research practice, and I'll go into how financial wellness really has come to intersect with retirement planning. But even though this phrase has been around for a while, we've probably all heard financial wellness more than once or twice, it's really coming to the forefront as far as importance. And actually in our annual survey of plan sponsors, so the organizations that have benefit programs like 401ks, this was their number one top priority for the first time in 2019. So this is only becoming more and more of an important topic, not just to financial service providers, but also to employers realizing that they need to help their employees out a little bit and make sure they're headed in the right direction. At Cerulli Associates, we have kind of a two-pronged definition. One is being able to meet your day-to-day needs, things like you mentioned, emergency savings, being able to pay bills. And then the other thing is more long-term, kind of looking ahead, and that's where you start to think about planning for retirement, maybe planning for children's college expenses, retiree medical planning, and those sorts of longer-term financial concerns. But really, you can only address those once you have your day-to-day situation under control. And so that's something where, as we take a look at asking individuals, what's your primary source of advice, where do you go to for information, we realize that a lot of individuals, particularly pre-retirees in their late 50s, early 60s, don't have any what we would consider official source of advice. They say, well, maybe I'll go to a friend, or I really don't know. And so that's where I think we've realized there's a big gap. And even if maybe high net worth investors are used to working with advisors, a lot of people don't have that kind of relationship. And that's where employers are stepping in and saying, hey, this is something that we can help facilitate to help you plan for both the immediate term, better information more broadly. It's something that's just more and more being seen as good business. And and we do get into this a little bit when we talk with plan sponsors and say, okay, why? Why is this your top priority? What does that mean for you? And it's not so much about the bottom line. It's actually really not about profitability, like some people or financial service providers think they really might need to drive home a message that this is going to really help your bottom line. We can prove we have a return on investment for this financial wellness program. It's not always about that. It's more about we want our employees to be satisfied. We want to make sure we're offering competitive benefits compared to our peers. We want people to feel that they're ready for retirement, because that's the whole point of offering them a retirement savings plan in the first place. So a lot more of this impetus from plan sponsors is about doing the right thing, having a good company culture, trying to improve employee satisfaction, knowing that when you're less concerned about your finances, you're more likely to be focused at work, you're more likely to show up on time for work, and those kinds of things. And even though, yes, I think we can agree, hopefully there's also a return on investment in some sense down the line, that's hard to measure, and it's not all about the bottom line. The short and unfortunate answer is a lot of people don't get advice at all or guidance. But what we're seeing is more people turning to their employer, and the 401k provider is also becoming an avenue for some information and guidance. And that's a natural launching off point in the sense that if you have a qualified retirement plan like a 401k, typically everyone is eligible. They're used to receiving communications every now and then from their 401k provider. There are those avenues for communications through email, print, and so on. So that's being increasingly used as a delivery mechanism for information, and inviting participants, if they like to learn more about other topics, maybe not immediately related to the 401k plan.
And that wraps up this episode of BRN Weekly. But wait, we're not done for the week, because tomorrow we've got our podcast, BRN Sunday, where I'm joined by members of financial services, academia, and the media to analyze all the issues related to retirement, the markets, technology, personal finance, and so much more. You're going to want to check it out. So until then, I'm Jeff Snyder. Keep on saving, and don't forget, roll with the changes.
Waiting here for you. with Tiger, they're the same.